Welcome to Factful Finance. Have you ever thought about how the decisions of just one person can shake up the entire global economy? Well, what if I told you that President Trump's tariffs are doing exactly that? And it's costing the US stock market a massive $4 trillion in value. Let's break down what this means for your wallet. First, let's talk about the numbers. The S&P 500 has lost over 8% of its value since its all-time high in February. And this isn't just a short-term blip. Tech stocks like Tesla have taken a hit, losing over $125 billion in a single day. For a market that had been soaring, this is a huge setback, leaving investors scratching their heads. So, what's behind this steep drop? It all comes down to uncertainty. Since Trump's trade war with countries like China, Canada, and Mexico began, tariffs have disrupted supply chains and raised costs for businesses and consumers. A $4 trillion loss in market value doesn't happen without significant economic ripples. Companies are pulling back, cutting forecasts, and even slashing profit expectations. Delta Airlines, for example, recently reduced its profit outlook by 50% due to the uncertainty caused by these trade tensions. Now let's talk about what this means for you. When markets lose this much value, it doesn't just affect Wall Street, it trickles down to Main Street. Your investments, savings, and even the cost of everyday goods could be impacted. Tariffs often mean higher prices for products because companies pass on those increased costs to consumers. If you're buying anything from tech gadgets to groceries, you might start seeing those prices creep up. But here's the kicker: this isn't just about bad news. This situation creates an opportunity to rethink your financial strategy. When the market is in turmoil, it's crucial to have a diversified portfolio and a solid risk management plan in place. According to the Chartered Financial Analyst CFA Institute, one of the best ways to weather economic storms is by staying diversified. Don't put all your eggs in one basket. Invest in different sectors and consider low-risk assets like bonds and government securities to balance out the risk of stock market volatility. Speaking of bonds, let's dive into something that's been gaining traction during the recent market turmoil: U.S. Treasuries. As stocks fall, many investors flock to government bonds for safety, pushing yields down. This shift could be an indication that investors are bracing for a slowdown or even a recession, and it could signal opportunities for conservative investors to lock in better rates. Here's where it gets even more interesting. The financial markets are built on sentiment. Investors are responding to the unpredictability of Trump's tariff policies, and many have started pulling back. In fact, hedge funds have recently reduced their exposure to stocks more than they have in over 2 years. If you're feeling the anxiety in the air, you're not alone. The big question is, what should you do next? If you're invested in high-growth stocks, this could be a wake-up call to reevaluate. Have a conversation with a certified financial planner, CFP, to make sure you're not overly exposed to volatile sectors. You don't want to ride this out only to watch your wealth take a hit you weren't prepared for. Look, no one can predict the future, but by understanding the fundamentals, you can make decisions that help shield your wallet from the worst of these market swings. That's why it's so important to stay informed and stay proactive. While tariffs are the primary cause of this market downturn, they are part of a broader story that includes geopolitical risks, trade wars, and global supply chain disruptions. The bottom line, it's all connected. So, what's your move? Are you going to sit tight and let the market's uncertainty control your financial future? Or are you ready to take action and strengthen your portfolio for whatever comes next? This content is for educational purposes only. I'm not recommending any specific actions, but it's always a good idea to consult a certified financial professional for personalized advice. Which part of this financial shakeup hit you the hardest? Drop your thoughts in the comments. I'm reading them all. And if you want more insight on how to navigate these uncertain times and make smart moves for your wallet, make sure you hit that subscribe button. We've got more content coming your way that you won't want to miss. If you found this helpful, you'll love the next video. Click on the one popping up on your screen right now. You won't regret it.